Currency risk hedging is an essential strategy for Petronas. In understanding the currency risk at the Petronas, in a natural hedge structure, Petronas, in addition to natural hedging, Petronas actively
So if we look at Petronas, I'm sure you're all aware, Petronas is a multinational oil and fuel company, but it has one sole shareholder, the Malaysian government. However, the subsidiaries of Petronas, they can have shares purchased internationally. Now, these shares are subject to the ringgit exchange rate. Hence, money coming into Petronas in the form of foreign direct investment and shares are subject to the exchange rate, which in turn impacts the profitability and longevity of Petronas. Now we're going to look at current issues regarding Petronas and Forex risk. So in Q3 of 2024, Petronas reported almost an 800 million ringgit loss, and this was driven by 1.1 billion ringgit in Forex loss caused by inefficient revaluation of payables. Now this means that money Petronas owes or money Petronas needs to pay out in terms of different currencies was not correctly evaluated, and this led to loss in the longer term since these payables were made to be handed out at a later date, showing that the forex risk of Petronas is very significant. Next, we will look at an article published by Petronas, and in the end of 2023 to 2024, Petronas had to increase their borrowing by almost 2%, and this is because of the foreign exchange impact. This clearly demonstrates that Forex has such a significant risk on Petronas, and this in turn leads to lower profitability and lower equity for shareholders. And in the long term, this is not beneficial for Petronas. So for example, international investments, international payments and receivables, and just international trading has a significant impact on the profitability of Petronas, since it's all subject to such a fluctuating exchange rate in the short term and in the future. Another article regarding Forex in Petronas, there was a net profit tumble of 66.3%, and this was largely due to compressed margin and foreign exchange loss pursuant to a stake sale in its subsidiary. So this means as Petronas was trading, they traded their subsidiaries in international currencies, and as you convert back to ringgit, which is the main denomination of Petronas, there is a significant loss. Hence, Petronas is very volatile and subject to Forex. Lastly, Petronas has recently introduced a GLX trading platform. Now, this is a subsidiary venture where they can sell natural gas online. This is to international buyers and sellers from Asia, Africa, and Europe. And of course, as we all know, international payments made online are in the local denomination. So for larger transactions, as we convert this back to ringgit, there's a big loss during this exchange conversion. Now, this online trading platform uses spot trading, where Petronas instantly receives the payment made in the international currency at the current rate in ringgit. Now, this is subject to high fluctuation, it's unpredictable, and consumers might choose to wait for a higher or more desirable spot rate, which in turn will not benefit Petronas. So now we've covered some contextual factors, we would like to go through why we would recommend internal hedging for Petronas. So Petronas imports goods and services. Now these are made in international currencies and subject to foreign risk and international exchange rates. Petronas is also involved in international financing. There's debts, and Petronas finances their subsidiaries internationally, which hold different values when converted to ringgit. Petronas also completes international research. Now, the funding for this research will be subject to the exchange rate as well. The last factor to consider is oil prices. Now, internationally, oil prices are denominated in the US dollar, which demonstrates the sensitivity to Petronas of the USD MYR exchange rate. Now, this is a graph of the USD MYR exchange rate, and inside it, the green line represents the ringgit denominated oil price. Now, whilst there's not a clear representation and duplication of the shape, we can see that there's definitely a relationship. And as the USD MYR rate falls, so does the oil price. And it follows a causation relationship, showing that changes in the USD MYR will slowly change the oil prices issued by PETRONAS.
Let me now start with leading and lagging. Leading and lagging describes the altering of the timing of receivables and liabilities in order to take advantage of potential currency appreciations or depreciations. Lagging in this context describes the delaying of payments or receipts, sometimes even beyond their due date, until the exchange rate is more favorable, while leading describes the acceleration of the payments or the receipts in order to profit from the current favorable exchange rates. Let me give you one example. If the US dollar is expected to weaken over the next few months, PETRONAS should try to accelerate the collecting of the receivables in US dollar and should also try to delay their payment of liabilities in US dollar in order to profit from the depreciation of the US dollar. Let me come to the advantages and disadvantages of leading and lagging. Advantages include the cost effectiveness, but also that there are no direct transaction costs involved. Disadvantages would be that there's, of course, accurate forecasting of foreign exchange rates required in order to profit from the appreciation or depreciation of foreign currencies, but also that lagging may negatively affect business relationships if payments are made too late beyond their due date repeatedly. The next technique would be the netting of receivables and payables. In this technique, receivables and payables in the same foreign currency are netted off against each other. This means that only the residual amount has to be hedged otherwise, and this is especially useful for multinational companies that also engage in intra-group trading. Let me give you one example. Imagine PETRONAS has a 3-month $5 million receivable and a 3-month $3 million payable. Both of these can now be netted off. The $3 million payable can be paid by the $5 million receivable, and only the residual $2 million have to be hedged otherwise. This means that the amount that has to be hedged externally gets reduced significantly. Netting within one company would be called unilateral netting. Netting between two entities, for example, between the head office and a subsidiary, would be called bilateral netting. And netting between more than two entities would be called multilateral netting. So the big advantage of netting would be that the amount that has to be hedged otherwise, for example, externally, can be reduced significantly, and thus the need for currency conversion also can be reduced. Disadvantages include the complexity in implementation, and also that, of course, there's a good system required that manages the netting process, especially if there are two or more entities involved in the netting. Let me now come to the next technique, the matching of assets and liabilities. In this technique, receipts are matched with borrowings in the same currency, and payables are matched with lendings in the same currency. The focus is on aligning the structure of foreign income and expenses to cancel out foreign exchange effects. Let me give you one example. PETRONAS sells crude oil and thus, of course, has many receivables in US dollar. So if now the need for a loan should arise, the loan should be taken in US dollar instead of Malaysian ringgit, so that the payable, in this case the loan, offsets against the already existing receivables. The advantages of matching assets and liabilities would be that there is, of course, no direct cost involved, and it is kind of a natural hedge against foreign exchange risk. The big disadvantage would be that there is a limited applicability of this technique, because if you go back to the prior example, if there is no need for a loan, then we can also not take a loan in US dollars to offset against the receivables.
This solution involves creating for PETRONAS. The next solution involves maintaining foreign currency bank accounts, particularly in USD. This is very vital for PETRONAS as its oil and gas transactions are largely USD dominated. These accounts simplify foreign exchange management by acting as a natural netting process. They also limit exposure to the exchange rate fluctuations by keeping the funds in the same currency as the transaction. However, holding large foreign currency reserves may lead to liquidity concerns if funds are not immediately needed. For PETRONAS, maintaining USD accounts directly addresses its operational needs. By reducing frequency of conversions between ringgit and USD, the company can lower transaction costs and minimize risk exposure. Given the high trade volume in USD, the strategy should be a cornerstone of PETRONAS' financial operations. Another quite important solution is the use of intercompany loans, where subsidiaries borrow from one another in specific currencies to manage their own financial needs. This approach reduces the reliance on external financing, lowering costs and creating a natural hedge. It also allows the company to efficiently allocate surplus funds across its divisions. However, the regulatory and tax issues can arise as these loans must comply with the rules of various jurisdictions. For PETRONAS, intercompany loans are a cost-efficient way to address currency mismatches within the group. For example, if one subsidiary has a surplus in USD and the other one needs USD, the holding company can facilitate a loan, reducing the need for external borrowing. By leveraging this strategy, PETRONAS can improve liquidity and management while managing their foreign exchange risks quite efficiently.
Thank you everyone for your detailed presentation. Now, let me share some key takeaways from our analysis. And combining various hedging techniques provides better protection